if you ran Airbnb, would that qualify? So you're managing and hosting, because a lot of, especially with the new piece of news that's coming out now, with Airbnb is now pushing for landlords to incentivize landlords to actually letting other people more hosting their units, making that more friendly. I'm sure there's more people thinking about that way. Yeah.
Yeah, you know what? You know how I said earlier that I didn't really like the term loophole used in most of the time when it comes to real estate? Airbnb actually, since you mentioned it, this might be a loophole because I'm not sure this was actually intentional, but this is the law. Is Airbnbs are a special category because they don't always fall under the same real estate rules. An Airbnb, if it's rented for under 7 days on average, then it's not defined as a rental activity, which means it's not passive by default. So sometimes if you have an Airbnb, it may not act, you don't have to be a real estate professional. You still have to be materially participating.
Right.
So maybe you're doing the bookings and things like that, but you're hiring someone to go in and do the cleaning. And so you could be a material participating, or you could be active in it, have material participation, but you're not a real estate professional because maybe you have a day job and you're doing other things.
Yeah.
But you would be able to offset that Airbnb income with your other income. So that is one little nifty trick that people are finding out. The catch 22 on that is that on the opposite side, if you have positive taxable income from an Airbnb and you're providing a lot of additional services, so think closer to a hotel. So I mean, there's some Airbnbs that maybe they give you a bike to use to get around, or they give you coupons for Ubers or something, or they give you, it's on the beach and they give you a volleyball court and some volleyballs and all these other like things that are not just a room to rent.
Yeah.
Then it may be subject to self-employment tax if you have income, which is an additional 15.3% tax that you have to pay on top of your income tax. So that's kind of the flip side of Airbnbs can be better in some ways and they can be worse in some ways, because true rental real estate is never subject to self-employment tax. So you don't run into that issue there. So just a little tidbit that I wanted to throw out there since you brought up Airbnbs.
Yeah, definitely. So again, that would be an activity, maybe something to explore to qualify you at REIPs if you're thinking about just only investing 1 or 2 single family home because that's all you can afford to buy. There's some ways to kind of explore, but definitely check with your CPA on this to qualify. Just different ways to kind of rack up some hours for that. Cool. Next one is, what limits are there to use depreciation for future years to offset income as a real estate professional status?
The biggest one is probably if you're a real estate professional, then you can pretty much offset any income other, your regular wage income, your spouse's income, all of that. But you run into that net operating loss issue that we were talking about earlier. That's one, reason you don't want to generate too many losses. But the other thing that is I'm seeing hit some of our clients is what they call the excess business loss limitation. And this was a new, something that Trump also passed, but we had some deferrals of actually implementing this because of some of the COVID laws that came out over the last couple of years. So now going into 2022 and forward, this is going to be a bigger issue. And so what this is it basically says that you cannot offset more than, I think it's 540,000 of income for married filing joint for 2022. With business losses. So in other words, like the cases that I've seen are maybe the spouse is a doctor and has a high wage income, and it's, and whatever it is, it's 600,000, 700,000. And then the husband may be a real estate professional. And so their full-time job is just investing in real estate. You know, like one example I have, he's a commercial real estate investor, and that's all he does day to day, manages it, buys it, he does everything. And but if they have more than 540,000 of losses from the real estate from doing cost segregation studies and things like that,
Yeah.
it can't offset the full wage from their spouse, or if they have other, you know, interest and income or dividend income from brokerage accounts. So in that example, if you had 600,000 of income, you only offset 540, you're still paying tax on $60,000 of income. So that's something to keep in mind if you have one spouse generating a lot more income, or you have other, you know, high brokerage accounts with capital gains and other things that are not from your business.
Yeah.